Hi folks, Ryan Honeyman here from Lift Economy. Many folks have come to us over the last 10 years and asked, how do I get more involved in creating an economy that works for the benefit of all life? They also ask, what skills and experiences do I need to help make this transition? So 3 years ago, we created something called the Next Economy MBA to help address this and similar questions. Lift Economy's Next Economy MBA is an online course that's designed for entrepreneurs, aspiring entrepreneurs, students, recent graduates, employees, and folks who want to learn more about transformational next economy strategies and businesses. Join the growing alumni network of nearly 250 alumni who've gone through this program and learned essential skills and hopefully built lifelong relationships for catalyzing businesses in the emergent and regenerative economy. So we encourage you to check out our course. You can go to lifteconomy.com/MBA. The next course, Cohort 7, starts on September 21st, 2021. So once again, go to www.lifteconomy.com/MBA. And now, on with the show. Welcome to Next Economy Now. The goal of this podcast series is to highlight the leaders who are taking a regenerative, bioregional, equitable, democratic, racially just, and whole systems approach to creating the new economy.
Morgan, welcome to the show.
Thank you, Ryan. Good to be here.
So Morgan, tell us a little bit about your background. What were you doing before you got into the mission-aligned investing space?
Sure. So I've been an activist all my life. And I think for me, as someone who was always seeking out systemic solutions, I fell into impact investment because it seemed like the most scalable, effective way for me to make social change. I grew up in Los Angeles and was doing a lot of work from the time I was a teenager in mostly immigrant communities in downtown LA. And I think you start to see very quickly how integrated issues are, that if you solve housing without solving education, without solving food access, you wind up back in the same place, and that the root of all those harms is really the way that the economy works. So that got me really excited about thinking through how do you shift economic systems. And that led me into endowment activism as a college student. And now 17 years later, it's really all that I've done, but am thrilled that because of that, I've been able to be a part of so many different types of movements. I'm working on so many different issues.
What was the issue you were trying to change in college?
The issue was really just that nationally, there's $400 billion that's managed by colleges and universities. And for as much as they talk about, given that they are mission-driven, often nonprofit institutions, how much they care about the environment or their local community, and then all their money would be invested in companies that were completely against those values. So over time, I think you've seen very specific movements. So for, going as far back as divestment from Vietnam and then South Africa, then fossil fuels. Yes, you can always pick an issue, but my issue was just this money needs to be invested responsibly 100% of the time, right? It's not about waiting for one particular crisis to happen, but having a really proactive and comprehensive approach. So from that perspective, we launched the Responsible Endowments Coalition when I was a junior in college, and then a couple of years later had the opportunity to really run it and scale it as an organization to where we were working on 100 campuses across the country with over 1,000 students, administrators, and trustees involved.
I think I was probably just going to parties my junior year of college. So
I didn't do a very good job of being in college from that perspective.
Cool. So you have a lot of affiliations. There's Candide Group, Transform Finance. You worked at the Responsible Endowments Coalition. Now you're an author. Can you just help clarify, what are some of these different networks and affiliations you're involved with, just so the listener has a sense of, the different hats you wear at any given time?
Sure. So I think what's important is that in general, when you think like an organizer, right, it's about kind of looking what is the work that needs to be done And then what's the piece of that you need to own versus when can you empower other people? And there was a moment about 6 years ago where I started to feel like we needed to really deepen the impact in impact investment. And in order to do that, we needed someone organizing and educating investors. We needed to make sure that community-based organizations and activists had greater access to these tools. And then we also needed to have some sample portfolios to be able to show the world that these weren't just pie in the sky concepts, but that you actually could build a sizable portfolio through not just 100% to impact approach, but really with a deeper commitment to social justice. And that is the piece that I personally really wanted to take on of doing the investment. So Candide Group is a California state registered investment advisor that myself and Anair Ben-Ami co-founded, where we work in supporting a very limited number of clients in terms of building impact investment portfolios with very deep social justice values. And then in terms of organizing the rest of the field, put together Transform Finance alongside Andrea Armeni, who serves as the executive director and is based in New York. And Transform Finance is building a bridge between finance and social justice and building that bridge from both sides. So they host an investor network that brings together over $2 billion of investor capital that is really looking to have a deeper impact, and then also provides trainings for community-based organizations, building the second part of that bridge to get to know impact investment. How could it be something leveraged for their movement causes? Can it be used as an earned revenue strategy or as an advocacy tool? So those trainings have been over 80% people of color and really working to also diversify the industry. So in that case, I'm co-founder and chair of the board, but it's a completely volunteer position for me. And then Candide Group is really my full-time effort and focus. And then the book came about just knowing that there's been such an exciting moment in the context of impact investment that we have the opportunity to scale the industry rapidly. And I'm very deeply concerned with this question of how do you make sure that you scale the right thing? And to me, that means making sure it's a movement that's accountable to the people it's supposed to serve, that they get to be an active part of that conversation, and not just as consumers and producers, but as actual protagonists and owners in that conversation. So that's a lot of the work that we've been doing to kind of prove out through Candide Group. And then also that's kind of moving throughout the field in the context of Transform Finance.
That's great. Maybe let's dive into a little bit on the Candide Group side, and then I'd love to take a longer deep dive into the book, in a few minutes. So maybe for Candide, can you give folks an example of like some of the investments, or like what are you really looking to do with Candide to give folks a sense of some of your day-to-day work?
Sure. So in general, we try to really view it as, social justice is the client and we leverage capital to serve it. And that we work, so for example, with the Libra Foundation on behalf of members of the Pritzker family. I know Regan Pritzker was recently on this program as well, who we work very closely with and love very dearly. And essentially what we do is looking at every asset class and finding opportunities to be able to bring an impact lens, right? So needing to have real discipline around financial returns and expectations while trying to maximize the impact that we're able to create in that process. So we look across sectors and geographies, which goes back to that systemic change thesis, and that we're often paying just as much attention to the how as to the what. So for example, when you look at something like renewable energy, where you might think, well, anything renewable energy is impact, but how are you paying the workers? If you needed a large landmass, for something like wind, how much were you really in communication with local community to make sure that that benefit is equally spread? Who gets to access the energy? And is it something that's really affordable and appropriate and non-extractive? Right. So we're really interested in what are the practices, that go along with any enterprise in addition to what it is that they're building.
I think you touched on something that a lot of our listeners are curious about. Like, what is an extractive versus non-extractive investments? Because I think, there can be impact investing that's extractive, right? So maybe that would be helpful. Just like, what are some of those terms mean, and maybe some examples of how it might be or not be extractive?
Sure. So in general, in terms of that, how question, there's three principles at Transform Finance that we really seek to follow and that we've also sort of ported over to our investment practice at Candide Group. The first is to engage communities in design, governance, and ownership of enterprises. The second is to make sure we add more value than we extract. And then the third is to balance risk and return across investors, entrepreneurs, and communities. And I think in the case of all three of those principles, we wanted them to be two things, right? One is heartfelt, the idea that hopefully you hear those three things and feel like, oh, of course I want to add more value than I take back out, or I wouldn't be doing impact investing. And then the second is that they have to be verifiable, numerically measurable and verifiable. Otherwise, it's very difficult from an implementation perspective to be able to really compare apples to apples. So in terms of adding more value than you extract, to take it to its most fundamental level, if you look at the cash flows in a project, did you leave more money in the beneficiary community than you took back out? And this connects back to the general concept of fairness, right? I think a lot of social enterprises stop when they say, I made this person better off. So for instance, in the case of microfinance, there were places in northern Mexico where women had been paying 1,000% interest rates to the local money lender, which meant that when the microfinance bank would come in and charge 200% interest, that was absolutely better, right? Women would make that choice all day, but that doesn't mean that it's non-extractive, right? So when you had an organization like Comportamos, which made 168 times its money on the IPO, could you have charged those women much lower interest and had a slightly lower but completely acceptable return, right? So I think that's where we try to really calculate at the end of the day, was my objective to help the poor women in Mexico, or was it to enrich the investors? And that if my objective really is about impact, I better make sure that those women are benefiting more than I am. And just to be clear, non-extractive investment doesn't mean you don't get to profit or that you don't make a return, right? But the idea is that you're making sure that returns are distributed equitably between the different parties that contributed to that success.
I imagine one of your big areas for education or maybe even challenges is around educating investors who are the ones that usually hold the sort of upper hand in most investment, like sort of most engagements with businesses, in the sense that if I'm going to make an impact investment, maybe I still want to have quote unquote market rate returns, even though it's impact, and that might be extractive for the company. So how do you sort of talk to investors around like return expectations and that principle of non-extractiveness?
Sure. So I would say two things. One is to examine, when people often talk about market rate in impact investment, it's like, what does that mean? Which market are we talking about? So if it's the market where we treat people terribly and destroy the planet, maybe that's not my starting place. And I want to think about what a realistic return is. So for a foundation, typically that means, if they're giving away 5% a year plus keeping up with inflation, something like 8%. For a family where you're really kind of getting to make decisions for yourself, if the difference happens to be a couple percentage points, but you get to tell your grandchildren, I created wealth, but I did it in a way that created so much value for others, how much is that worth it to you? So I think it's interesting. I think there's certainly lines of thinking that say you don't have to quote unquote give anything up in order to make a market rate of return. And certainly there's a number of areas in which that's true and you can pursue that approach. And there might be other times where as an investor, you explicitly choose to give up some of your power to make more money than another opportunity because you're focused on the total value that you're receiving from this transaction, which includes care for other people. So a very basic example, I think a lot of us that are, middle class consumers, Ryan, when you may not be a great example here, but tell me when you go to the egg aisle, which eggs do you pick and why?
You want me to really answer that? Or is it?
Oh yeah, that's a serious question.
Well, yeah, I guess maybe I'm an outlier, but it's just like, what's the organic, free range, like non-clipped beak, best possible eggs? Which is always a hard choice because there's like, do you get the omega-3 like enriched ones or not? So I don't know.
Totally.
Yeah.
And I guess the question is between the $1.99, God knows where they came from eggs to the $12 pasture raised, you could pet the chicken. I'm guessing you probably buy something in the middle, right?
Yeah, that's probably right. Yep.
And I think it's essentially, as investors, we're making that same choice of there's some basket of values that I'm trying to fulfill. And it's about return. To me, it's about the story that it's telling, and it's about the role to other people. So I think we make that ethical price choice all the time in everyday consumer decisions. So I don't see why we need to treat investing so differently, right? No one says, oh, I expect that I'm also going to be able to get that, perfect egg for $1.99, unless you're going to invent it in a lab. And at any rate, I don't want to take us too far down that tangent, but it's just to say how much money to make is a personal decision. And there's also very legitimate reasons why some people or institutions may need to maximize their returns. But I think it's important to just take that moment for yourself of what is it that you really need and what are you willing to give up to get there? Because there are trade-offs that are implicit here. So that's one piece of it in terms of like, what is the market rate that you're looking for? And then the other is just the idea that we can create benefit for everyone, right? That this doesn't have to be this zero-sum game, but it's about, going back to that third principle, balancing risk and return between investors, entrepreneurs, and communities, because everybody deserves to benefit in the interaction.
And do you see any best practices in the community engagement side of the investment? So, for example, Regan Pritzker had mentioned, one of the problems that she's seen in philanthropy is you'll have a board of, very wealthy folks who is like, oh, my pet project, like I just love these people here. I just want to invest in it. But there's no sort of strategic, it's not really like thinking about the whole issue or a whole problem. And there's usually no engagement with the folks on the ground who will be like sort of benefiting from the money or investment. And so like, what should investors or people who are looking to help, say, communities of color or sort of like underrepresented groups, like what should investors be thinking about in terms of involvement and like getting them involved in the early process?
Sure. So I think part of it is kind of redefining as an impact investment professional. I think we often have a very clear kind of picture of what's the type of financial knowledge that you need to be effective as an investor, right? There's kind of a list of tasks I need to know how to do. I got to know how to calculate valuations. I need to know how to look at sensitivities within a financial model. I need to be able to interpret a term sheet. I need to know what's the appropriate type of financing for a particular company in a particular moment, et cetera, right? There's a list of things you can learn. I think we haven't gotten as savvy as an investment community of what are the list of things on the impact side of being an impact investor that you need to do regularly, right? So I think some of those things are about the company that you keep and how much in relationship are you with affected communities, with grassroots-based organizations and events, right? In the same way that we go to a number of private equity or clean energy conferences, we're equally prioritizing events within activist communities where we have the opportunity to sit and learn and have that impact our strategy. So I think it's more than anything about a mindset of, do I dedicate as much time and attention to my learning and training and network building within the impact side as I do within the financial side? And I think that for each organization, depending on which communities they're hoping to work with, that's going to be a very different practice. And then the other is also, if it turns out that perhaps that's not a community where it's really appropriate to insert yourself, are there ways that you can be supporting opportunities for other people to get into the field, or empowering fund managers that may come out of those communities to be able to do that work more effectively?
One other question, and then we could maybe shift to the book, is this, there's been a strong emergence, at least in the folks I've talked to and the communities I've seen around, you've mentioned social justice and also racial justice. Like, how do you make investments that are leading to a just transition and that are racially just? And I'm wondering if you have any thoughts about how does that play out in practice? Like, how does someone say, okay, I'm making an investment that's leading to a just transition or is mindful of racial justice? Like, how would someone think about that issue?
Sure. So I think one is that, racial justice, gender justice, class, and access are implicitly part of any economic activity. So a lot of my kind of approach to this is really about broadening the questions that we're asking, if that makes sense. So for instance, it can be as simple as stopping yourself to say, what are the racial justice implications of this project? How could it be more widespread? Or, where is it creating opportunities or blocking opportunities? So for example, if I look at something like solar, the boom in residential solar and the amount of financing that went in there, well, residential solar for whom, right? For people who typically had 600 or more FICO scores, which typically is going to be people with greater economic access who are going to be more likely white. And then you look at companies like Posigen that figured out ways to underwrite residential solar that didn't require any FICO score, but just based on payments that they've made regularly in terms of their mortgage and electricity bill, creating a sized unit that could be more one size fits all for much easier installation. And then tying that with energy retrofits, given that people who are lower income tend to have draftier homes, right? To have had less repair over the years. They're able to capture significant and predictable cost savings for low-income families, which means that their solar product, despite, I believe this is correct, being the number 4 installer in the country, is predominantly focusing on low-income communities of color as a business model. So I think that's where, when you kind of ask that question, what is the racial justice story here? And if you're finding that it's a net negative, can you find other companies that are working in that space that are going to be more thoughtful about that issue?
Got it. That's very helpful. Sort of shifting, one of the most exciting things I know that you've been involved with is writing a book and the sort of like whirlwind that comes with it. I'm curious for the background story. Like, what was the genesis behind the book, and when did you start thinking about writing it?
So this is going to go deep into my psychology and inability to relax. So I was technically on vacation in Brazil on a 5-day holiday on the beach, and I looked up impact investment on my Kindle and realized that there really hadn't been a popular book written on the topic, and that because the industry was getting so close to scaling, that soon someone at a major financial institution with a massive marketing budget was going to write a book and was going to set the definition of impact for the next decade or two. And that prospect was really terrifying to me. And I got fired up by the idea, how could I get some of these deeper questions around impact really into the public narrative? So I think the point was not, I have the answer of how we should do this, but here's some critical questions we should think about as we scale. And here's some really inspiring examples of organizations that are already doing this work so well. So in those 5 days on the beach, I wound up writing 90 pages. And the book overall was 226. So that was definitely, and went through a lot of editing after those first 5 days. But I was just so fired up to make that happen. And 3 months later, I had a book deal. So it was really not something that I had anticipated at all, but just was a moment in time that I felt needed to be captured, and that I was in a good position to try to really get some different arguments out into the public eye.
Yeah, and one of the questions I think that you address in the book that I'd love for you to speak more about for the listeners is this idea of, can impact investing empower millions of people worldwide, or will it replicate the same mistakes that have plagued both aid and finance? Can you say more about that question and what you found in writing the book?
So I think a couple things. So one, over the years, there's been a lot of critique of development aid. And I think that in terms of the way that charity is often constructed, one is often really focused on short-term fixes rather than long-term, much more structural and systemic changes. That it has the challenge of kind of taking the easy wins, in part because it's easier to evaluate. And I think you see that in impact investment, going back to my microfinance example, where we stop at the solutions that are better, even if they're not fair, right? And how can we really push to an industry that is encouraging fairness and really solving inequity in a much deeper way? And then in addition, there's this element of often outside experts that are coming in that are setting priorities in a very top-down way, as opposed to having a much more bottom-up approach, focus on local leadership that's able to ensure that there's accountability to the actual needs of people.
And in writing the book, were there any stories that stuck out to you, of people having this sort of like balance, this sort of idea of like, what is impact? Like, did you have any sort of anecdotes from the story that you could tell?
I'll tell two stories. So one was about sort of what led to my disillusionment with charity, which is originally I thought I was going to wind up in international development, and actually spent time working with the UN in Honduras and worked in Sierra Leone for some time. And it was during that period, I was there a year after the civil war had ended, which was incredibly brutal in Sierra Leone. And people were generally eating once a day. It was really all they had. And that was tough on me. I was really not used to that sort of diet, and I would occasionally kind of sneak breakfast in my room, but in an effort towards solidarity, right, I was trying to, eat fairly little as well. And I was once in the market kind of waiting to head out to the countryside again and needed to stock up on some food. And I saw a can of tuna, and it was the sort of mirage type moment of, wow, I get to have like a tuna fish sandwich. This is amazing. And I went over to look at the can, and it said World Food Program, gift from the government of Japan, do not sell. But given that its cost was about US $1, that was basically, for this woman selling it, she could buy 5 heaping plates of local food to feed her family instead of eating that can of tuna, right? It was this great lesson in rational economics of why in the world would she eat that, right? If she could use it to buy so much more food. And I really got to thinking about when you look at who actually gained value from that interaction, right? The Japanese fisheries that were paid for the surplus by the government, who then had to ship it, maybe even through Rome and the FAO to get it all the way out to Sierra Leone, just so that it could get sold to a U.S. aid worker so that a woman could buy local rice and greens and fish, right? And that there was probably 60 times as much economic value created for other people than for the intended beneficiary, right? And this sort of feeling that if I continued to contribute for that structure, I would wind up contributing much more economic value to people who already had resources than to people who didn't. So that was part of my moving over into impact investment. But then at that point, kind of starting to really think through, well, what does this impact mean and who gets to determine it? And for some organizations, I tell another story in the book about a colleague of mine who I really respect, Mark Straub from Coastal Impact, where their approach is all about enterprises that serve 1 million people. And they're not particularly picky about how the people are served, right? So sort of the opposite of if our approach is that we really care about the how more than the what, they care much more about the what than the how. And we were talking one day and I was saying, I feel badly that I'm trying to kind of get things right before we make the scale. And he's like, yeah, Morgan, that's kind of like being the enemy of the good. And I said back to him, Mark, I guess I am the enemy of the good, right? That I want the perfect to be in competition with the good, because otherwise we wind up sort of intellectually lazy in terms of saying, well, this is better, so that's good enough. And I really want to challenge us as an industry to get deeper into definitions of fairness and deeper into definitions of accountability to scale something that truly can solve inequality rather than just chipping away at the edges.
I think that's a great transition to scale because one of the concepts in the book is like, how do you scale smart and what does real impact look like at scale? One of the things we've seen at Lift Economy is, sometimes it's alluring to think of creating like a business that's a social enterprise that scales to affect 1 billion people. And at the same time, maybe you lose some of that locally self-reliant, regionally adapted aspect. And so one of the things we've seen is sort of like scaling by regional replication as opposed to like one company being like super big and being impact focused. But I'm curious, like, how do you look at what is sort of the right scale or do you kind of address that idea in the book?
I think it's a both and. So I see a lot of really interesting efforts to be able to join local and regional efforts into more national structures that then can lead to greater efficiency of capital. So one example of that is the Working World, which has formed a financial cooperative where then they are working with local actors, training them to be able to deploy capital, but kind of hosting one fund. And in that way, when you look at things like first loss reserves, you're able to really do that in a collective fashion rather than, a group somewhere like Jackson or Mississippi or Richmond, California, having to do all that fundraising and support work on their own. So that's been a really interesting effort in terms of how do you link local efforts with some sort of national infrastructure. And then the second, and both the Working World and Grupo Yansa receive their very own chapter in the book, given that they really exemplify elements of the Transform Finance principles. Grupo Yansa helps communities create utility scale renewable energy projects, right? So the idea as well of saying local communities are able to manage large projects and that it's not just about having kind of cottage industries, but really creating significant wealth. But within Grupo Yansa's model is that funds that are made through those projects are then used to turn around and finance the next community in a solidarity model. So I think that's another element of it, of can you use large projects to enable more local activity, kind of shoulder to shoulder in terms of that work.
That's great examples. I totally agree. I think you're right. It's got to be both and. It can't be one or the other.
And I think the other is that if you have large organizations that have widespread ownership and governance, right, that's a very different animal than the idea of having large corporations that are, basically financially benefiting a very small group of people, right? So I think it goes back to it's not just the what, but the how that makes a big difference in terms of is something large because it creates lots of value for lots of people or because it creates lots of value for very few.
What has been the most surprising thing to you about writing the book?
One of the things that I really appreciated in the process of working with the editor is really being forced to justify arguments. I think sometimes when we have opinions, it's important to step back and kind of say, do I really, really believe this? Do I believe it enough that I'm willing to have it sit in print for the next 5 years? And perhaps I'll have to at some point issue the statement of, well, I've changed my thinking and I've learned more and progressed the way that we all will. But to have to kind of solidify your opinions is a really challenging process. So I think I appreciate the way that pushed me, and that also pushed me to be brave. It's hard to be opinionated. And one of the fights that I kept getting in with the editor is I kept saying we instead of I. Because part of this, it's not just about being my opinions or my work, but that it's been built up by so many people, right, that I've been influenced by and learned from and certainly try to reference and credit as much as possible. But at a certain point, it is really about a collective understanding. And the editor kept making me move from we to I to, saying you're being a confusing narrator because no one knows who you mean by we. But I do think it's great that we certainly look to individuals for leadership, but I think we always have to remember that behind every person is a we, right? That help to kind of develop a collective body of ideas.
And through the we, what do you see as the top 2 to 3 challenges to really breaking through the next level of sort of impact investing? We've talked about like mindset and, maybe structural mechanisms of deploying capital and like how you measure impact on the ground. But there's probably ones that come up to you over and over again. And like, what are those top 2 to 3 things?
So I think, and some that we have discussed, but I think really do merit reiterating, right? So one is real thoughtfulness about how much is enough in different contexts. What are we actually, who are we trying to create wealth for and why? And to make sure that the answer to that is something that we all can really feel great about around a certain transaction. Then the question of who is getting to inform the definition of impact for a particular sector or geography, and are affected communities really front and center of that conversation? And what are the structures that we're creating to do so? And I think that connects to some of these questions around impact education that I brought up, or community accountability structures. These are collective problems, right? This is not about saying that each investor has to solve this on their own, right? There's a lot of operational efficiencies we could be capturing as an industry here. And what I am really encouraged by is that this is a community of people who has shown that when they choose a question to focus on, they're very effective at answering it. So for instance, I'd say in the last decade, the key question was, can impact investment be market rate? And we've now had study after study that's proven that that is in fact possible, right? And that was a really critical activity to have done, right, in the context of scaling. So that's something that's really critical in the concept of scaling, right? That we needed to convince the financial industry that it was worthy of putting their toe into, that this trend was here to stay and was something that they should invest resources in. But I guess I would say now that we've proven that point, let's go back and make sure that the impact catches up and that we're dedicating just as many resources as a community to getting the structures in place that are going to be able to support the impact side of impact investment. And that's going to take investors doing different work. It's also going to take philanthropy, right? In the way that philanthropy is really what kicked off impact investment in the first place. You know, impact investing, the term itself, was essentially a branding campaign that the Rockefeller Foundation launched in 2007. And it was brilliant, right? It was, here's the thing that's happening. We need to call it something and we need to coalesce around that. So everybody, 1, 2, 3, call it impact investing, right? And let's scale this concept and definition. And they put millions of dollars into the infrastructure building that it took to get there. So I want to be clear that this is a major and large task, right? This is not a simple undertaking to infuse the impact in, but I know we can do it. You know, I know we have the resources and the talent if we decide that we want that to be a core question for the industry.
Yeah. Are there one or two particular trends in impact investing that you are really excited about? Like anything stand out to you in that regard?
I'm excited that I feel like more people are really starting to question the impact. That for a long time, it wasn't really okay to do so, right? Because there was this concern of, you know, we haven't really made it yet as an industry, so don't criticize it, right? We need to make sure that it can at least get on the map. But now that it's on the map, I think there's a lot more energy from people saying, well, if I'm going to dedicate my time and money and attention to it, I want to make sure that the impact is real. So that I see as a very positive trend, that we need that kind of spirit of inquiry to be able to get there. And then I'm also really encouraged that I feel like we've seen a lot more interest from civil society, from nonprofit organizations, community-based organizations, and activists who are saying, I'm tired of being kind of on the treadmill of philanthropy. I want more resources for my movement. I want to spend more time serving my people rather than fundraising. What are the ways that I can use enterprise to really build the type of economy that I want to see and be able to balance out as activists often fighting against things that are not working versus building the future, and that there's more tools available for people who are really excited about pursuing that path. And I think with that, you're starting to see much more natural interaction between investors and community leaders.
And so moving towards those resources, obviously everyone should buy the book, Real Impact, The New Economics of Social Change by Morgan Simon. I love that Morgan, one of her favorite bookstores is Politics and Prose. So you can buy it on Amazon, but if you really want to be like, Next Economy, you can buy it in Politics and Prose. So a shout out, support your local bookstores. One other resource I wanted to point out, and then I'll let Morgan talk about other resources, on Morgan's website, morgansimon.com. She has a really cool link that I should have done for my book, the B Corp Handbook, but it's about for academic institutions. So you can bring the Real Impact work into the classroom. There's a link for teaching guides, tool for MBA programs, and for other social science programs such as international development. So any of those of you in academia, students, teachers, check out morgansimon.com and the academic institutions piece, because that's super useful.
Yeah, and I should note with that, there's a Harvard Business School case study that is a great accompaniment to the book. So often for business school classes, they get to teach the case and the book in concert.
That's amazing. And yeah, so they have a good primary resource with your book and the website. What are other things you direct people to when they say, how do I learn more about impact and impact investing?
I think it depends a bit what they're looking for in terms of theory versus practice. So maybe I'll give 2 resources there. In terms of practice, there was a great report put out a couple of years back by the KL Felicitas Foundation in partnership with Sonnen Capital, which really shows how they got to 100% impact, and in particular, the return profile and how they beat the market through impact investment. So I want to emphasize that I think the financial story is still a really important one, and that we get to make a lot of choices around the edges, in terms of how we think about appropriate returns and to whom. But for people who are just sort of going, well, what is this thing? And how do I even conceptually think about implementation? I think it's very useful. And then if we're looking more at these types of themes with regards to how do we think about shifts in ownership and solving inequality, there's a great book by Marjorie Kelly called Owning Our Future, The Emerging Ownership Revolution is one that I would really recommend.
Big shout out to Marjorie Kelly. I'd also say folks who are investors or looking to make sort of gifts or philanthropic pieces, Transform Finance is a great website. I know that you all have sort of recurring trainings for folks who are interested in things like, how do I make racially just investments? How do I make investments that respect Indigenous rights and Indigenous communities? Gender lens investing. So those are some great resources too, just a shout out for Transform Finance.
Yeah, I think in the Transform Finance context, for investors who are specifically looking to deepen their impact practice, there's the Transform Finance Investor Network. And Andrea Armeni is the best person to talk to there. And that's how you get access to the webinars. And then the trainings happen both domestically and internationally. And there's general trainings, but there's also the opportunity if you're working within a specific area. So for example, if I'm investing or philanthropically engaged in something like housing, Transform Finance is able to do custom trainings for sectors to be able to bring together actors within that sector and kind of work on what's the impact investment approach to solving that particular issue.
And Morgan, do you have any requests for the listeners? Is there anything that they can do to help support your work?
I would say it's less about supporting my work, right? It goes back to the me versus the we, and just in terms of supporting the overall movement towards impact investment as a tool for transformative change. I would say one is just doing that personal review of where is my money investing and what are the opportunities to really push that further. And then two, thinking about what are some of the ways that you can support the creation of infrastructure that's going to solve some of these questions in terms of getting to deeper impact. Because I think a lot of people are excited about it conceptually, but recognize that a lot of the toolkits haven't really been built yet because they still need support to get there.
Any other websites or folks where they can find you and reach out if they have any questions?
MorganSimon.com is really the easiest. Certainly CandideGroup.com for more information on our investment practice. And Transform Finance, both the website, but then the Facebook group is very active in terms of kind of keeping up on what are issues around the intersection of impact investment and social justice.
Next Economy Now is a production of Lift Economy. To listen to all of our episodes, go to lifteconomy.com/podcast. That's LIFT economy.com/podcast. You can also sign up for our monthly newsletter at lifteconomy.com/newsletter. Please also rate and review our podcast on iTunes, Spotify, Stitcher, or wherever you get your podcasts. Thanks for listening.